Well, I hope everyone's doing good on this weekend. Let's prepare for this week and go over the tickers that you guys have requested. We're going to start with Beyond Meats, which is BYND. And I'm going to start on the weekly just to get a good overview, just so everyone else can see along with what's been going on with this stock. And for those of you that may not know, we just hit all-time lows on it a few weeks ago, and we're trying to curl back on the upside. Just going off the weekly, I'm pulling this up so you guys can just see the bigger picture as to where it is. I love to look at stocks on the biggest picture possible just to see the overall movement. So I have an idea as to where the stock is compared to where the IPO happened, or just in general as to where it is compared to where it has been historically. So just going off the IPO, we opened up here. Now in the current times, we're basically zoning at all-time lows. This is when I take it down to the smaller frames now. I don't need to see anything farther back than what we see right here on the screen currently. So even knowing that, I can go down to the 4 hour, the 2 hour, nothing else matters with this stop going farther back because all we need are these levels right here. Is monthly levels IMP. Explain to me what IMP is. I'm not very good with terminologies. I'm gonna wait for him to, oh, important. I mean, monthlies are important when you're looking at like the major move. I like to look at the larger picture just to see historical price action and get a gauge as to where it is currently based off what you may not be able to see if you're on the 30-minute, the 15-minute, the 1 hour. It's just like a market gauge for me. But if I can use the monthly candle, I will do that. But since we don't swing contracts like 3 to 4 months out, like holding 3 months out, not just getting an expiration 3 months out, I don't like to look at the monthly that much unless I'm like investing in that stock and or contract, not just trading it, if that makes sense. So looking at the 4 hour here on BYND, I'm going to keep everything very quick and simple. And if you guys want to mention stuff and ask questions along the way, I will respond when I see them. So I am looking at, I mentioned this to Rocky over the weekend. I'm pretty sure that's why he typed it in the Discord for us to all look at. But I'm looking at BYND for a curl and a push up to the gap fill at roughly $16 a share, just based off historical rejections that we've had. In the smaller time frames, we've used historical support, which was also resistance around this area right here. I'm gonna make this different color. So historically, this was a resistance zone, and I'm going to take this down to the 1 hour just so we can look at the smaller section that matters right now is what I'm talking about. Going off the yellow highlight, this was a heavy rejection before we broke above. And once we broke above, we have held as support on this yellow highlight. Historical rejection now acts as a more present support zone. And that's what we've been curling down and pushing, curling down and pushing. So what I'm focused on with BYND, I want to see if we can hold this rising wedge that's forming. And outside of the rising wedge, if we break that on the downside, I want to see if we can hold the support, which is the yellow highlight, for a double bottom, or at least make a higher low to form another trend line, if that makes sense. A pullback to this trend, but if we hold this rising wedge, I want to try and catch BYND on a slight pullback, add time, and catch the move to the upside. I'm not too worried about just a little scalp. I want to try and catch this move right here. This is what I'm gauging at. And obviously, if we do end up pushing on BYND, there's going to be a pretty decent rejection around this area, which is still almost $14 a share, $13.80 a share, basically. So BYND is a swing play that I see, and I'm pretty sure that's why Rocky brought it up, because for people that can't sit and trade all day, this is one of those stocks. It's also about 52% short interest. People are shorting this stock to go down. The only way to cover a short position in shares is to buy back the shares you're borrowing. So imagine this breaks out just like it did back here, where my cursor is. When a short squeeze occurs, shorts have to buy back their shares. And people, GameStop and AMC basically, but not as severe, obviously. As people cover their shorts, they buy back their shares. Buyers that are buying shares for the first time, it's like a double buying pressure. That's what makes these stocks squeeze. So BYND currently has roughly 52% short interest. That may change when the new month hits and then they recalculate the short interest. But this is basically a ticking time bomb waiting to happen. And I know Prodigy's been looking at it and he's been playing it as well. I'd expect this to break out to $15 a share, if not push the 16 in the next month, if not shorter. I'm focused on increase in buying pressure, the volume on the bottom. We're moving up on the upside, higher lows, higher highs. I just want to see us contest these areas right here. I want to see if we can fill the gap up to about $14 a share. That is what I'm seeing on BYND. And the short interest is more so conviction as to why this has the potential to move upside. So moving over to Nike now, NKE. I'm going to start on the daily just so for people that haven't looked at Nike in a while, you can see the overall market with how it's been moving, the overall price action. The biggest thing I want to point out, and this is one thing people are starting to realize about me, I'm always focused on the zones. Where is it bounced historically? Where is it rejected historically? Is that working in the present times to make stuff happen? So that is what I'm always looking at when charting on the larger frames. I want to see where the strength is. So if we do pull back on Nike, I understand this yellow highlight when I'm on a smaller time frame. I know that's a massive area for some reason. Does that make sense to everybody? So now when I'm looking at it on the 30-minute, the 1 hour, I don't have to scroll back and find a zone. I know this yellow highlight anywhere in this area is a heavy buying pressure. It's liquidity grabs. So as Nike is holding, pulling back, staying above this support, I'm using the smaller frames to find entries at this point. So knowing the larger frame is the yellow highlight, I like to use the same method on the smaller time frames to find the next liquidity grab. If we do sell off, if we have a short drop before the next push, that is what I'm focused on. So with Nike, around 108 a share, 109 a share, which we're currently there, I would like to see the buying pressure stay strong. I don't want to see a heavy sell-off, but if we do, that's more of a reason and or more conviction-wise to have calls based off the low risk, high reward. The major support is the yellow highlight. And yes, that's a wide gap, but I drew that just for like the visual. It's not like the actual from the top of the yellow to the bottom, this is where the zone is. It's just in this like circumference of it, in this vicinity of this area, Nike has heavy buying pressure when the price action is above that zone. So using the smaller frames, around 108 a share would be a nice pullback for Nike to curl because they do have earnings this Thursday. So when looking at that, 108 a share for the pullback, and obviously the upside, if I zoom out a little bit, we can see Nike has rejected this area multiple times. I'm going to change this to yellow. Rejections, when we're above it, we never pull back heavy with selling pressure. So there's never been like a massive like buying presence when the price action's above around 113 a share, 114 a share. It's more so selling pressure going off price action. So using the two zones with Nike, we can like, for me, when I'm gauging this from like an overall market perspective, I have just a weird feeling like the last earnings for Nike, we gapped up heavy. And I think that was back, let me go to the daily so we can see that better. The last earnings Nike had was right here. We pulled back in the same zone and we gapped up almost about $12 to $13 a share just from the earnings when that overnight happened. So I'm basically expecting Nike to hold around this zone the same it has historically and have a push off earnings, but I don't want to risk a whole position into earnings. It's more so the anticipation. I'm pretty sure a lot of you that have been trading for a while, you understand a lot of stocks, they run into earnings. And if they don't run into earnings, they always hold at a major support or they're at a major rejection zone at resistance. So I'd like to see Nike kind of consolidate. I don't want to buy in too soon to contracts because I don't want theta to take the value down, even though the stock is holding off the chart, if that makes sense. So this is a time play. I'm waiting for the best execution. If we have a major sell-off on Nike this week, whether it's Monday, Tuesday, or Wednesday, I would like to swing a cheap contract for July expiration for an August expiration. I don't want to play 0 DTE because regardless, if you're wrong with 0 DTE, it's a dead contract. It's going to zero regardless. So I'd rather play time. And if earnings are bad, we've seen stocks recover the next day, the next week off of a bad earnings report when it gaps down. So I want to give the contract time to work its way out, but I have a good feeling that Nike could hold around 108 a share and push from earnings or just have that run up into earnings back to 110, 111 a share. Target for Nike for me is around 113 to 114. And if we do break above the 114, I would not be surprised if we fill the gap to these liquidity grabs back in March of last year, no, March of this year. And that's roughly around 116 to 117 a share. So now I have SPCE, which is Virgin Galactic. This is a stock I have not charted in a while. So I'm going to switch this to the daily. Once again, just like the last two stocks, I like to have an overall idea as to where the stock is based off price action. So just seeing this, the IPO was obviously higher than where we are now. So we are basically at all-time lows on the stock. Not currently, but we've been in that range for the past few weeks to a few months. So we had a huge volume surge, not too sure what that was from, and we pulled back massive after that surge of volume. Looking at the stock, I'm always very honest with you guys. If I think something does not look good, I'll tell you directly, I don't like the way this looks, but I still chart zones just to show you guys how I find stuff and what I try and do with it. Why is that black? We want this a brighter color. Let's go. That's good. So this support zone I put here, we bounced off that currently, but I'm using liquidity from the past that hit when we pulled back. In this area, it was kind of a dud, but we tried to hold. You can see if I zoom in on it, when the price was consolidating this area, we tried to show buying pressure to hold that level and we failed. Once we broke above, slight pullback with heavy buyers. If we go in current times, we had heavy consolidation around this area right here. Consolidation trying to hold this price action at that support at roughly $4 a share. Now in the current times, we pulled back right to that support area. So the biggest thing I'm watching, if I was playing this, which for me personally, I will not trade this, I'm just charting it. If $4 a share can hold and we see some buying pressure, see some volume coming in, or at least buyers off of the downside, when we do come down, buyers keep it up, this could be a nice area to load calls with time. As you can see, going off the hourly time frame, SPCE does not move very fast, and it only moves about $1 every few months, every few weeks. It doesn't have like a huge push. Obviously, we had a huge volume surge that happened. I'm not too sure what the news was on this. Weekly's in a downtrend channel. I will pull that up just so other people can see. Yeah. So for those of you that don't know what a downtrend channel is, lower highs, lower lows. It looks like we're trying to find a reversal from bearish to bullish that could possibly be forming, but I don't want to speak on that until we see more direction. We need a lot of more days of price action on the chart. This could be possibly finding a bottom for all we know. There's not much that we can use based off what we see currently, and these are the type of plays where you just monitor it as time goes on. There's not much to do with this right now, and just like what Mr. Trade said, it's still in a downtrend. There's no proper visual as to why we should go long on this kind of stock. $4 a share has to hold. We need trends to make higher highs and higher lows, whether it's the weekly, the daily, the 1 hour. We're still rejecting around this area, around $6 a share. So even though we're at 4, the gap fills up to 6. Main support, which is also the all-time low, is roughly $3 a share. So the risk to reward on this based off share price is a $1 drop compared to a $2 push to the upside. If this breaks out, it could run. Me personally, I'm not really liking this stock, so I wouldn't recommend it. But if you like the way it looks, you can always look into it and do your own due diligence with charting. And Shed, with earnings, I have seen that stocks with good earnings boom, and then the next day it dumps. And the opposite with stocks with bad earnings, they go the upside the next day. It all depends on the stock, but usually that tends to be how it works. A lot of stocks, if they have really good earnings, they tend to consolidate for a day or two before it pushes back upside even more. But that is usually how it works. Good earnings push up, and the next day they consolidate or they drop off. Earnings that are usually bad, are they really bad? But they drop off from the earnings report, and the next day they have like a slight push to the upside. And over the next week or so, just like Target is a good example, and we'll be looking at that soon, it works its way up to the upside. Yeah, I would say profit taking. If usually when earnings are really good, like NVDA, I have a feeling the reason that held so well is because AI is like the bubble right now. It's like the hot take, or it was, and NVIDIA breaking all-time highs and holding for consolidation. It's kind of just like zoning at all-time highs now. And I'm pretty sure a lot of people are long in NVIDIA based off the company and just the bigger outlook on what it could be doing in the next few years. So last week when we charted PayPal, which is what I have on the screen right now, I'm on the the 1 hour time frame. There's not much to look at this historically because the main levels we charted last week are still in play for this week. So I was telling everyone to watch the trend, which we did not pull back to this. We had the breakout, and that was right here. We held, didn't have that pullback, and we pushed higher, and now we're kind of in a smaller frame down channel, lower highs, lower lows. At this point with the stock, I am still saying, and I'm still thinking PayPal's going to fill the $70 a share gap, $71 a share. It would be nice. And since this was our original support to see a pullback, I readjust my chart. I'm not deleting this zone. I'm just raising it. This will be the next support if PayPal pulls back. The historical rejection zone is now going to act as a support if we pull back. And along with the pullback, this trend line could still be in play. And let me change the color on this highlight to white. So on this pullback right here, we can see a trend hold on higher lows and also this support zone hold as well. So it's like a double positive in the charting system if PayPal pulls back to this trend and or support zone. So I personally don't like playing the breakout. PayPal is obviously pulling back slightly, but I would like to see the gap fill to the support around $65 a share. It's only about another $1.80 drop to the downside, but this would be a nice support hold on PayPal to go long and possibly catch the pullback and then ride this back up to where we rejected on this past push that we just had. And if we do contest this rejection and we surpass it on the upside, I would not be surprised if we touch $70 a share within a few days after that breakout. A lot of stocks, when they're in a zone like this, they can break out and move pretty quickly. People are waiting for the breakout to start buying on that actual share for the stock. They're not really interested in playing it when it's down here. The big boys obviously load it, but retail and people like us, they want to see a visual. We want to catch what most people don't want to play, and that's the pullback to the next major support, which is also a higher low on PayPal. So a quick overview, $65 a share is a nice support to load. Calls with time, 0 DTE or the week of for PayPal would be risky, but that could be a possible support zone. And then my gap is still going to be staying at roughly $70 a share, but we have to break out of this resistance at roughly $69 a share first. On SPX, the recent candle is a red doji, but SPY is green. Why? We will get into that at the end. I think I've said this before, but I like to do SPY and SPX at the very end so we can end with like an overall market sentiment with charting. But I'll look into that and I'll see, and we can talk about that because I did not know that until just now. So I am on target now. I'm going to switch to the daily time frame just so people that may not know what target is looking like, they can see a bigger picture of it. Earnings drop off, and then of course the sell-off. I was talking about target in this area with support, and it did not hold, obviously, as you can see. This was about a week or two ago when I was talking to people. If we pull back on target, this would be a nice loading zone for calls, and that was a failed setup, obviously. Now that target is lower, it's all about readjusting. I'm going to put a level around here, which is also the bottom tick, but also heavy consolidation before the breakout actually happened. And I'm going to take this down to the smaller frames. Let's go to the 2 hour. And let's look at target just based off the gap down from the earnings they last had. Using resistance, if you can look at the historical support that bounced, is now acting as a rejection zone. Do you guys understand how? Oh no, you're good, Ants. No need to apologize. If you guys are noticing, I'm always on the larger frames because I can see the bigger picture. If I switch to the, let's say 15-minute on target, imagine this white zone's not here. All you see is, okay, we rejected here. We're trying to curl. Target could be a good entry point, but why did we reject here? There's always a reason with price action why we're rejecting. So if we go back to the larger frames, like what I was just on with the hourly chart, we can see that that used to be a heavy support zone. Support flips, resistance flips. Price action is always respecting historical areas. So as we used to hold as support, that is now going to be a rejection. So if target can break above this historical support, which is now a rejection zone, it will act as a support when it breaks above. Break above, pull back to make higher lows, and it's going to hold that support zone of price action, and it could bounce up off of that. The idea with this is to look at the fills, look at the trends. Obviously, this can come lower, so this trend line can change, but I'm just doing this based off where we are currently. I'm not saying Target's going to push to the upside, but this is how I trade. I'm not interested in Target around these areas, only because if you're looking at the main support, which I put this yellow line down here, and the main gap fill of the rejection price action around 140 a share, Target is in the dead center of this zone. So it's like a 50-50 call right now. The only evidence you have to really buy calls and or puts is this little area of price action with the highs and the lows. We got a nice support right there, and then we have a rejection zone in between. So I'm always charting. I'm not doing every dollar with like prices for like zones like this. I'm not doing this. I'm going to put one there, one here. I'm only focused on the bigger picture because I'm waiting for stocks to go to where I want them. I'm not buying a stock and just telling myself, okay, this has to go. I want to wait for the best possibility for low risk, high reward. So if we're going off the smaller frames and not the actual 124 low and the 140 high, I'm focused on just this area right here for low risk, high reward. So we have the support zone, and then we have the resistance on top. It's a small gap that we're in. It's just up, down, up, down, up, down, up, down. We're currently in that zone. When we break out of it, we push right back in. When we break out of the zone on the upside, we pull right back down into it. So if I'm looking for the best chance for low risk, high reward, I want to enter calls around the bottom area down here. I'm not saying, oh, if you enter calls down here, it's going to send right back upside. It's just the low risk scenario to put probability in your favor. It's less stressful. When you wait for zones to fill, it gives you conviction because you're going off price action and not just your emotions of, I'm in calls, this has to go up. Because if you get in calls here and we pull back on Target to like 130 a share, more than likely you're going to sell because you're down. But this is actually like, if this breaks, then you should get out. This is like the bounce zone. At what point would it invalidate calls? If we break out above 140 to maybe 142, then retrace to 138, would you not look at longs anymore? So say Target has momentum and we push to the upside. The first thing I like to see resistance. This is like for the call scenario for upside. I want to see resistance flip to support. That's the first thing I want to see. So since I have this 133 area, and let me actually put a line here just so you can see on the side what price these are. Let me change this to red. So we have just these two lows, just the consolidation we're currently in. I'm not worried about the gap fill to 140. If we break on the upside on Target, I want to see, if we pull back, I want to see 133, 134 hold as support to make higher lows and then push to the upside. If we do break that 140 area, it's not like we break, oh, now we have to run. It's always nice, and it's like a soothing feeling to see a resistance break and then pull back and hold support. Even if it holds support for like 3-4 days, it's consolidating and there's not enough selling pressure to break it on the downside. Buyers are keeping it up. That gives you conviction that it could possibly curl and push higher on the share prices. If we break above for a second time, above the previous tap out, say we come up to here and then we pull back, at that point, you're just focused on the zones in between. It would be an invalid setup, obviously, because like you break above, you pull back again, double weakness, you're thinking it's like a rejection. But at that point, it could be making higher highs on the larger picture. It's making trends that you may not notice unless you zoom out more. And at that point, it could do something like this with a lot of movement. So it would like push up. Let me make these a different color. Let's go. It's not dark enough. Let's go green. Green should be fine. I'll make them a little bit thicker too. There we go. So like we push up, pull back down, and we push back up again. Like we're holding trends now. We're flipping to a bullish trend, rising wedge basically. That gives you conviction that strength is holding. Higher highs, higher lows, trends are reversing back to bullish. And then if we zoom out to like the 2 hour, now we may be able to hold above that support and work its way back up again. Yo, that's where you look for higher highs. Doesn't just mean rejection. That's a top level. Yeah, like literally, I'm always thinking like this. Like, where could the stock go next? And I'm taking a while on target, so I apologize. But like, this is what I look for. I'm not just focused on like if I take all this stuff away, all you see is like candles. There's no trend that I just drew. I'm anticipating the move. I'm not entering and then saying now it has to go. I'm waiting for it to fill the gaps and I'm trusting the chart. Logically, if we hold around 130 a share again on a pullback, we're making higher lows from the previous low at 125 a share area. At that point, we should push to the upside, have a slight healthy pullback. It's not a sell-off. Healthy pullback to trends, making another higher low as we're moving upside. That's what I like to look for. I'm looking at the bigger picture with the moves happening. So I'm moving over to Tesla now. And I'm pretty sure everyone knows what Tesla looks like. So I'm going to stay on the 2 hour. We have literally been zoning on Tesla. I don't have much to say on Tesla only because the same levels we charted last week, they're still in effect. This trend line I put in, I'm actually going to switch to the 30-minute just so it's a little bit more bigger for us. We're still kind of holding trends of higher lows. You guys see that? It's a little shaky, a little iffy. And of course, we sold off end of the day on Tesla a little bit, but there is a chance that we can still hold. And this is not going to be an invalid setup until Tesla breaks below and holds below around 248 a share. Until that breaks below and holds, at that point, just like Target, break on the downside, recontest that zone. If we reject, then we're in a bearish setup for Tesla. Not saying we're going to drop that low, but you get the idea. As supports break, I want to see them reject now as resistance. Same thing. If Tesla pulls back to the 248 and it holds support, that's basically a triple bottom, which is more conviction to get calls and trust the price action, trust the chart, trust what you're seeing. Until we actually break below 248, Tesla is still bullish. You also have to watch for this too. It's very invalid, but lower highs are forming. The previous tap out from the higher highs before, this is going to act as a resistance if we push up on Tesla. And I hope I'm not drawing too many lines for you guys. I'm just trying to like show you how I think in a very quick pace manner. The historical higher low or a higher high from when we had this upsend, this is going to be the resistance. Now that we broke below it, we pulled back up, tried to hold above, but we rejected. This is going to be a major level on Tesla if we push that high around 264 a share. Before 264, we also, like my levels right now, 256 has to break on the upside, 261 area has to break, and then obviously the 264, 265 area, that will send it to the upside. So I'm switching to, Coco, here we go. I'm switching to AMD now. And this has been very, very bearish. But here's the thing. This is a perfect example. I'm going to keep this very short. All the stuff I drew last week, it's all invalid. We broke downside. Looking at the 30-minute, do you guys see this being bearish? I want at least 5 people to respond before I keep talking. Does this look bearish on the 30-minute? Be 100% honest. If you know the bigger picture, don't say, no, it's not. Looking at the 30-minute right here, does this look bearish? I need 3 more people to say something. There's 1. I need 2 more. I want to see if you guys are active or just listening. 1 more yes. I just need 1 more. It can be a yes or a no. There we go. I'm going to take this out to the 4 hour now. Okay. So a lot of people, when they see this, it's kind of like, what am I looking at? Like, I don't understand. Every time NVIDIA was trying to break out, we were rejecting multiple zones. The main one I'm focused on is where I currently have my level around 110 a share. This was the 110 a share, and I'm going to delete the lines up here since they are invalid until we catch up to them again. This 111 a share. And actually, let me see. Yeah, we're on the 4 hour right here. The first major, like if we drop this low, 105 is going to be a major bounce zone, but focus on how much consolidation we had around where we currently are. If you notice, we had a heavy sell off to 108 on AMD. We tried to push back up to about 109. Everywhere in this zone was chop, but there was heavy using the GP levels are low. Using all this consolidation, it was indecisive. A lot of people were like, should I buy? Should I sell? This is what I see when I look at candles. Should I buy? Should I sell? Once buying pressure caught up, it sends. Heavy pullback, sends right back up even heavier. Heavy pullback, sends right back up even heavier. We had that heavy pullback. We are in the same area. Yes, we're not as low, down to like $100 a share, but focus on, if I switch to the 1 hour, we'll see more candles form, and I'll come back a little bit so you can see everything. Notice all these tap outs on the smaller picture. All these like tried to break, failed. After it broke, pulled back, held. Everything is around 108 to 110 a share on the video, on AMD. That is currently where this sell-off was on the smaller frame, which looks bearish. Obviously, everyone's like, well, why wouldn't you want to wait for a pullback down? Oh, come on. There we go. A pullback down to here. Like all these liquidity grabs we had, you have to understand, to get down to this level, we have to break all these levels, all this indecisive buyers and sellers, all this right here. All these zones play out. And if you look at this on a smaller picture, if I zoom in, a lot of buyers hit around 108 to 109 a share on AMD. Look at all these wick downs. When they passed heavy, they pulled right back up. This area right here pulled down, tried to break, a lot of indecisive, but it never could break below $100 a share until it finally did. But once we broke below, tried to break, failed. Tried to break, failed. As we get closer to the current times, tried to break, failed. Now we are above. Historically, we reject. In the current times, we will hold as support. The question is, how much lower can it go? But that's not the main concern. It's the idea of, this is a solid area to start looking at calls, to start monitoring AMD for a reversal. Everyone was loading calls back here, hoping it broke out, hoping it broke out. This is the best chance to now look at this and think, this could be, not right now, but this could be a solid entry for calls as AMD forms in the next few days, possibly few weeks. Or could this be the bottom already and it starts to make those higher highs and higher lows on the smaller frame? Just like with Target and just like with Tesla, this could start to do one of these things. Start to form those trends going again. Does that make sense to everybody? Let me change this back to white. There we go. You have to understand what can happen next. It's not the idea of like, oh my gosh, major red, major red, major red. I have to get puts before it keeps dropping even lower. The larger picture shows that anywhere in this area, when AMD has a pullback, we have buyers present. We are in that area. If you add time to this contract, a slight pullback with a heavy push in the next few days, if that does happen, those red percents are going to be gone based off of $4 to $5 push in a day when it's been consolidated. The larger picture shows that AMD possibly has found its next low point for the next push. They got to make a quantum chip or something for those levels to be broken. I mean, literally, like, I like AMD. I'm not saying buy calls right at open tomorrow, but just monitor it. See how it's going to move this week. It's at a zone that is a very important bounce. We are in that zone. Just keep an eye on it. That's all I'm going to say. There's no specific levels I'm going to say for this, but just watch how it moves this week. See if the buyers are heavy. See if sellers come in and sell it off even more. But I mean, just going off, like if I go back to the 30-minute, before the breakout we had, this was where we were. So just using the smaller frames, the heavy consolidation before the breakout, this is where we're at right now. Can we hold as support? That's my main question going into this week for AMD. So I am on Apple now. And if you guys don't know, which I'm not going to like draw up the larger picture, but Apple is basically all-time highs. What you see right here is all-time highs. So just like with the previous stocks, Target, Tesla, I've been watching Apple based off higher lows and higher highs off the trends. Every pullback gets eaten up on Apple. And when it does break the trends, it just holds the previous higher low. So when you're focused on this, like for me personally, let me I gotta take away this trend line so I can give you guys a visual. So we kind of had this area here. We push. If you want to put the trend there, you can, but this is like a fake break off the trend to get people to think it's selling off, when in reality, the trends is holding even when it breaks out. So with Apple, it has a major resistance at obviously the all-time highs, but focus on the previous higher high off the trends. If we're looking at this from a perspective of where could the next level be? I don't want that yellow. There we go. We're using these like breakouts, pullback, breakout, pullback. The rejection's here, but guess where the previous higher high was that's going to act as a support possibly? This right here. This is the zone for Apple to buy if it has a pullback. Not because, oh, it has to stay strong, but just going off price action. When you pull out the trend, it could break on the downside, but the trend is invalid. That's just a visual gauge. Most retail, when they only follow a trend, not the actual pullbacks on the zones, like right here on the previous higher high, this is going to be the grab if we sell off just to push back up. If the entire market is bearish, obviously Apple may follow and break every level. Levels are invalid at that point. But you have to keep low risk, high reward. For me, I would like to see Apple pull back to $184 a share, $185 a share. Hold with buyers. Don't just like see a wick touch and I got to buy in calls. See if it can hold. Because if it doesn't hold this area with the red highlight, watch this area right here where I'm making this yellow underneath. This is going to be the zone for Apple, just these two mains. And obviously the all-time high, which I'll change this to orange so it stands out a bit. These three are like the only thing you should be watching with Apple. Everything lower doesn't matter until the main 183 a share breaks on the downside. That is the fill if we pull back. The main thing I want to see, pull back to here, and then possibly push back up. If we break the red, this is what I'm watching down here. I'm not buying puts because we broke red. We've seen it break on the downside and show strength just to push it right back up in this area right here. So I'm not just going to buy puts because red breaks. I'm not going to buy puts because, oh, we have to fill the gap to the downside. You have to use what you know off knowledge and low risk, high reward. If we reject for a triple top on an all-time high break and pull back, you can get puts for low risk, but you have to understand with strength, Apple's going to keep going. The best entry for calls, in my opinion, is going to be around 185 a share. If 185 breaks, the next loading point is around 183 a share for calls. So now I have Roblox pulled up. I'm going to take this to the 4 hour just to see what the heck's going on because it looks like we sold off this past week on Roblox. And this massive lower highs, higher lows. So this is kind of a toss-up for me because when I'm looking at this, the biggest thing I see is obviously the trends holding. If we can get a pullback, calls would be amazing for Roblox around here to keep these trends in formation. But if we don't hold the trend, this is what I'm seeing, is this right here, which will be a double bottom basically on the previous higher low based off the trends, using support zones and rejections when price action fluctuates above or below this area. Did we contest that resistance on top? No, that was on Friday we did. So Tuesday we never even pushed. We just pulled back on Roblox. I would like to see a pullback to roughly $36 a share, $35.50 to see if buyers are present before getting calls on this stock. I also would not just buy puts blindly because we could just push right back up to the upside. We need a break of about $42.70 a share to keep Roblox momentum on the upside. If we do pull back, roughly $35.50 to $36 a share will have to hold to keep momentum on that break back to the upside. So a pullback and then bounce off that trend to fill the gap back to the upside. That is what I'd like to see on Roblox, on the bigger picture, obviously. So now I'm on ENPH, and this is in the energy sector. XLE, and this also sold off. I'm curious if oil and energy may have a hot week. Can I zoom out anymore? Let's go to the daily so we can see more. There we go. Okay, so this is going to be a tough one only because main supports, like the main support is down here. Notice how I'm only focused on like the bigger frame gap fills. I know it's very it requires patience. It's very hard to say like, oh, I'm just going to wait for it to come down here. It never goes down to that level. It just sends right back to the upside. It's a lucky guess to buy that kind of stuff. But if you want to use like in the middle, you can put a level around here for ENPH at roughly 146 to 147 a share. And outside of that, it's really, for me, it's hard to really see anything with this. Does anyone have any personal bias or personal opinions with ENPH, or are you more so like we had a heavy sell-off the last few days? It's going to be hard to really see what's going to happen until we have more candles forming, see what price action does this week. Because ENPH looks kind of 50-50. Logically, we had a heavy pullback, so calls is the best low risk, high reward. But could we pull back to 148 a share? If not, the main support at roughly 120 a share. Yeah, the second one. Okay. Because this is, I mean, this is a stock I don't even watch. This is when I tell myself this has to do something before I look at it. I don't want to waste my time. There's other stuff that looks better. This is just one of those stocks. It's good to bring this up because this is how I can tell people I would like to see 146 support touch before I even think about buying this. If we do push tomorrow and this goes up to like 167 a share, a $10 push, I'm not going to chase calls on it. I just want to see it pull back. I want to see it go back to the resistance on top. I'm not really interested in a stock like this until I see more personal, like I like this. Not just, oh, I got to get in before it's too late. There's so many other stocks to look at. But for me, pull back to around 146 to 147 a share. If that breaks, I would not be surprised if we fill the gap to 120 a share for the main support. Because if you guys can tell, we're trying to get higher lows going. We're trying very hard. Could this be the bottom before ENPH has that next push to the upside? Could energy be hot the next few months? Yeah, let the chart come to you. I'm very big on that because you trade less and you trade better quality setups. Less trades, more money. Less trades, more money. For some people, that probably sounds crazy, but when you play a solid setup like that has high potential compared to scalping stuff for 5% gains, 20% gains, that one solid trade you waited for could outweigh all your gains on every scalp you took. Size light, add time, let the fills happen on the stock. So now I have QQQ pulled up. And we basically rejected that resistance, which is kind of crazy. I'm going to switch to the 2-hour on this. I'm going to zoom out a little bit. I'm going to put a level at the double top we basically had just so it's on a visual once I go to price action on the smaller frames. I'm going to put this around right there. And let's make this yellow. I'm going to go to let's go to the 15 minutes since QQQ is basically breaking out and we need only the current areas to really look at the stock. So we're in the same formation, kind of like SPY. We're trying to break on the downside. The biggest thing that I like to tell people, when you're looking at a smaller frame, the first thing you see is like, oh, if we break these levels right here, QQ has a massive fill down to this area. And yes, that is true. You can't anticipate the sell-off, but you can't anticipate the break because the hardest thing to really realize, this is a major buying zone. So a lot of people, they want to wait for this to break and then buy puts. In reality, we could just wick below and push right back up. So for me, I would like to see call side for QQQ. If the whole market sells off, everything's invalid, which I think you guys realize. If the whole market's red, horrible news comes out, selling happens, every price action, every level is basically an invalid statement now because money follows. If everything's selling off, people are going to sell off with it. But if we hold zones, it's going to respect that and push back to the upside. So until we break below and hold underneath 360 a share on QQQ, I would not be surprised if we maybe just pull back slightly, even wick underneath, but we push right back up on the upside. So I'm still bullish until trends reverse completely. This support on Q is holding. Tech has still been hot. I would not expect this to break on the downside. And if it does, it has to hold underneath that 360 a share. If we do break underneath, I would not be surprised if we fill the gap to like 355 a share, if not lower at that point. For the upside for Q, let me delete these trends real quick. For the upside, I'm going to keep the same level I had last week when we charted this at roughly 366, 367 area. That is going to be the rejection. So until then, main support 360 a share, main resistance roughly 366 to 367. If we break 360 on the downside and hold underneath, I personally would like to see a break and a recontest to show this is a rejection now and not just a break and that's it. I would like to get puts then when we recontest it. I'm not saying we wick, the wick comes back up and then we get puts. I want to see a break and hold for like an hour or so, 2 hours, 3 hours, a day or two, and then show strength to push back up and just reject that area and then form that downtrend. I don't want to anticipate puts and buy off the break. I want to see a recontest. That's personally how I trade. If you like to play the breakout, get calls, the breakdown, get puts, that's fine. But this is my type of style. So these are the main zones you should watch. 360 for support, 366 to 367 for resistance. Gap fill for support is going to be roughly 357, maybe 355 a share. TSM, this is what I have up right now. I'm going to go to the 4 hour just to see what's going on with this, because I don't think I've traded this. That's a nice pullback, and right off a double top too, basically a cup and handle forming. And this also comes back to these heavy support zones back here. So that was a major rejection that just hit. So at this point, we have the major rejection, the main resistance. We don't really need any other level besides that 107. Where is going to be the support loading zone? When I'm looking at this, I'm focused on the buying pressure, the rejections. We tried to hold here, push back up and rejected the main spot we have on the upside, pulled back and tried to hold support again, and we failed that. Once we broke below that zone, I'm going to take this down to the 1 hour just so I can see more candles. Once we broke this zone, we tried to push back up to the upside, and there wasn't enough buying pressure to get it going. Once we recontested that zone, let me make this red just so it shows weakness. There we go. So once we recontested that rejection, historical support is now acting as a rejection zone. Once we broke above that zone, we pulled back as support, pushed up off that. We came up to that main resistance I talked about earlier, roughly 109 a share. Now we're working our way back down. Can we hold that $100 a share, $98 a share, or are we just going to make a higher low off trends? This is going to be a time play, but it looks like this could be curling. I'm going to switch to the 30-minute just to see what's going on a little bit on the smaller frames. We could curl here. We have a lot of indecisive buying and selling pressure around this area, and that's currently where we're at, zoning upside and downside between about $100 a share and $103 a share. So this is going to be, for me personally, like a patience play if I was to watch it, see how this moves. If we get a nice curl with higher highs and higher lows on the smaller frames, we could form something like this. And that's when I'm looking for that, once again, a contest back up to that 108 to 109 a share. If we pull back, we have this support down here, roughly $98 to $100 a share. So we know where the support is. We know where the main resistance is. We are currently zoning in between. This is how I chart. If this isn't like enjoyable for you, then all of this is probably going to be like a little bit not pointless, but just like that's not my style. I scalp. I played smaller time frames. You can use the same charting to do the smaller time frames. And as an example, I will do that for meta on this next one, just so I can show you guys how you can use the same charting style on the smaller frames. You're looking for main zones. That's all this really is. So I'm going to take meta to the, can I do it on the 2 hour? Nope, we need the 4 hour, if not the week or the daily. And the 4 hour is enough. So the past, I want to say 3 to 4 weeks, I've been telling you guys, I think meta can touch 300 a share, and we're slowly approaching that. We're just under 290 right now. The main gap fill I wanted to see was around 300, 295 to 300 a share. And yeah, I'll add Google at the very end as well. So once meta hits this zone, the biggest thing that I'm anticipating, it's a two-way street. Are we going to break above and send, or are we going to reject this and have a healthy pullback for people to load back in if they miss the initial move? When taking this to the smaller time frames now, I'm going to go to the 30-minute. This is when you can use smaller time frames to have zones. So Meta, before I was telling you guys this last week, if Meta has a pullback to roughly 275 a share, you can use that as a support zone. It never came all the way under to that. Critical calls after the pullback. You can do that, yeah. When we had that pullback, it wasn't like held for a few hours. It was just a pullback and send. You can use the same 4-hour, 2-hour, the daily charting on the smaller frames to find those zones. If we're looking at Meta now, I'll readjust these to show you how you can do that. We had a nice rejection around this area. I'm going to make this yellow just so it fits in a little bit better. I'm honestly going to take this down to the 15 just so I can see more candles. So this rejection before, we had a breakout pullback. We broke out and we're holding now. If Meta pulls back to roughly 285, this could be the scalp entry for calls, a pullback just to push right back up to the upside. It's the same sequence. Everything that you chart can be used on different time frames. So that's the main thing that I like to tell people about. If you're a scalper, if you just trade on the day, everything you can use for different styles of charting. Meta is still holding on the smaller frames, these higher lows, and the highs are not really doing much. It's in the same vicinity practically. So if Meta has a pullback to this yellow highlight, it couldn't break above last time. So now it should act as a support. This may be a solid entry point for calls if you don't want to buy the breakout. Obviously, whatever your style is that you prefer, you can use, but a healthy pullback would be necessary for Meta. But if the QQQ and communication sector, if all of that is weak, Meta will follow. So you have to look at the sectors and also the overall market to see if the indexes may cause stocks that look strong to go bearish only because that's what the overall is doing. So on the smaller frames, main support, I would say, is 285. If that does break, I would not be surprised if we bounce around, I'd say 282 a share on Meta. And if that breaks, it's invalid all the way down to about 278 to 275 a share. And obviously the gap fill, I still have it roughly $295 to $300 a share for Meta. So now I have NVIDIA pulled up, and I'm going to take this only to the hourly. Everyone should know NVIDIA is at all-time highs, so everything before this is kind of invalid. Right here is all we need. If you want to look at the previous after earnings push and the sell-off, you can look at that as well. But NVIDIA is currently breaking lows and could be trying to find a new support zone anywhere. So there's a lot of indecisive right now with NVIDIA. The biggest thing that I like to look at, if we're focused on this wick right here, if we break on the downside, the next major bouncing point is a rough $16 drop to where I have this red highlight at. So there is a massive fill on NVIDIA. Me personally, I don't like to anticipate puts and just like hope that it breaks and keeps going. I like to catch stuff off trends. So for me personally, if I'm looking at NVIDIA, these lower highs forming right here, if we can get a push back to the upside, it could give you that like conviction to get puts if you're thinking bearish for NVIDIA. I'm not saying chips are going to drop this week, but you also have to realize around this area is a heavy buying pressure zone. So NVIDIA could just push right back up. You don't want to anticipate, oh, if we go to the 5-minute, it looks so weak. It just can't go higher. It can't go higher. Now it's trying to sell off. I'm just going to buy puts because the chart's showing me. The 30-minute time frame shows that there is usually buying pressure when we push down to this area. So don't try and just anticipate the drop off. If it does happen, like I've said earlier and before, you can use that support breaks. I want to see if the pushback acts as a resistance now, and then it fills the gap to the downside. I always anticipate and I wait for that pullback. If we break support, I want to see resistance reject. If we break resistance on the upside, I want to see it pull back to support. That is what I'm always doing. And if it does break and just go straight for that gap fill in the bottom, I'm not upset because my personal style is I wait for that confirmation. And if it doesn't happen, my setup did not hit, which means I don't make a play on it. That's how I keep my risk so low, because I wait for the proper setups that I know work for me. So now I have Amazon pulled up, and after Amazon, I will do Google and then SPY and SPX, and that is going to be it for tonight. So let's look into Amazon now. So just going off the charting, I've been putting this in the Discord pretty often for Amazon. I wanted to see it pull back to 120 before it had the breakout, and we never had it, as you can see. And once we did break out, I kept mentioning to you guys, if 125 can hold, like I'm talking like not break below and not push back up, but I mean like if it can't hold above after even wicking down, it's not going to have strength to go. That's why I want 120 for my entry. Amazon held this zone and just totally ripped right through 125, ripped through the 128, and now it's basically holding at what I wanted for a target, which is around that 128.50 area. If Amazon has a pullback, I personally want to catch it at roughly 127 to 127.50 a share. I would like that area for a pullback for calls. I don't want to buy calls where it's at now. A healthy pullback is what I want to see. If you're on the 5-minute for Amazon, you see a pullback, you're going to be thinking, oh, this is going to go to the ground. Zoom out slightly just so you can understand what used to act as a resistance is now going to act as a support if price action allows it. This is what I want to see for Amazon, a pullback to roughly 127, 127.50, and for it to send right back to the upside. Possibly break out to 130 plus again, 135. I think my target for this is 137 is the main target. Not saying it's going to happen this week, but long term, if we keep the trends of higher lows and higher highs, I can see Amazon touching that 137 a share zone. Let me get Google. Okay, so you guys help me out here. GOOGL, correct? GOOGL. I know iPhone typed that, but a lot of people here that may not know this, there's GOOG and GOOGL. And I always used to look at just the 4-letter word, not the 5-letter. So here is Google GOOGL for the ticker. I'm going to go to the 4-hour on this just so I can get a good view on it. This is a solid setup right here. This actually looks really, really good. Okay, so personally for me, A class is the main. Okay, so yeah, this is the A class. So cup and handle, a lot of people, when I say cup and handle, it's like, it's so stupid. Why are you looking for a cup and handle? All of this downside just to form support, now pushing upside. The rejection to start the brim of this cup is the main support that you want to see hold on a pullback after it breaks on the upside and forms that handle. This right here is one of my favorite setups, only because the risk is minimal, the reward is so much higher. There is a heavy, heavy zone on Google right here. Notice how we're literally holding that and we're forming that handle for the cup. This is literally like probably my favorite setup. And like the hit rate on this is so high. If you don't play week of contracts, you have to give it time to form. If someone saw this form in, let's take this down to the 30-minute. If someone saw this forming 2 weeks ago and got the week of contracts, guess what? It never played out. So if you add time to this and you're looking at it from a bigger perspective, when this breaks out of this handle, Google could easily run to 130, 135. I'm not saying in a day, I'm not saying in a week, but just over time, that momentum's going to carry, just like Amazon. It's going to have that strength to push. I mean, look at the volume down here on these volume candles. Volume's getting less and less, but we're still holding price action. Imagine if volume came in and this just pushed to the upside. How much time? Personally, I would get the July monthlies, which I think is July 21st expiration. That is what I would focus on. Don't go too far out the money. I don't know how much the contracts cost, and we're on a time frame right now, so I don't want to look into that. But I would say 125 calls for July 21st expiration. If you have a very small account, you can get the 130s, but you have to realize that move has to happen because the longer it sits, that contract's so far out of the money that the theta is going to kill that so fast. So July 21st, I would like for the expiration date, either the 125 call or the 130. If you want to be even safer, get the 122, 123 call. Once you're in the money, it's going to hold value pretty well. But this setup right here, like this is golden. This is literally textbook material right here with a cup and handle. So for those of you that don't really understand cup and handle setups, this is probably the most beautiful one I've seen in a while. This is honestly amazing. This downside is good, holding support. It should rocket up. I'm going to do this just for fun. Would not be surprised if Google taps out, not saying in a week, not saying a month, but just overall, 140 a share to 145. I would not be surprised if it touches around that area. 125 calls are 2.35. What are the 130 calls for July 21st expiration? Because 2.35 is kind of a lot for small accounts, but if you have, let's say, over 1,000, you're sizing roughly 20% of your account, which is kind of a lot, but this setup may be worth it. I'm not saying do it, but there's a chance. I think the 130 should be like what, 1.1, possibly 0.80. That sounds about right based off just correlation. I take you at 0.94. Yeah. Okay. So yeah, that's not too under $100 for a contract. You can buy one contract as a small account and just trust the move. That contract could easily go 100%. So size and light and trust in the move. If you usually size, let's say $500 and your risk is a 20% drawback, which is a $100 risk, you can size one contract of Google for the 130, and that's your risk. One contract, boom. If the chart is invalid and we do break on the downside, you can sell for a 40% loss, which is less than your initial drawback you take of $100 risk. It's only going to be a $50 risk if you sell for 50%. If the setup works, imagine sizing $500 and you sell for a 20% gain, you just made $100. Buying one contract of the 130 and it going 100%, you just made the same profit return with less sizing. And the risk is less because you're sized basically to lose that position since that's your normal risk amount. Hopefully that makes sense to you guys. Size light with time, let the chart work its way out. Because if this move does break out, that contract could go in the money. You never know. You have literally 3 weeks for that to work out. So let's pull up SPY real quick. Going back to what Ange said about the SPY and SPX situation. Let me see where that message was again. SPX on the recent candle is a red doji, but SPY is green. Why? Is this on the daily answer? Is this like the 4-hour? And are you looking at SPX futures or just SPX, like the hard SPX 9:30 to 4 p.m.? Let me scroll back down because I know he's talking. There we go. Daily, just SPX. Okay, let's look at the daily for both of these and see. I'm going to start with SPX just to get an idea. Daily picture. And for those of you guys that were like probably wondering why am I so bullish for the week, look at this supply zone or demand zone. Pullback, takeoff. Okay, so red candle, switch the SPY, green candle. So let's see. I have to go down the smaller frames to see this because we know the overall day is red, so we can look at the smaller frames to see what's happening. Interesting. I gotta go to the 1 minute now. I just need to see the opening price and the closing price. That's all it is. Oh, okay. I see now. I see. So SPY opened up at the lows. SPX was like gapped up a bit when it opened. So if you can tell a little bit, the open for SPY was already at the lows. Does that make sense? There was no major red candle here. But if we open up SPX, it opened up a little bit higher and then sold off right at open, then pushed up. So SPX looked like it may have been, I don't want to say gapped up, but it opened up higher than SPY did, probably based off the pre-market buying pressure, I would say. But I don't have a, like, I don't want to say like sophisticated answer, but I'm not too sure exactly why that's red. I mean, green, one is red. Yeah, SPY and SPX are the same. It's just, I know having pre-market and after hours differential on both kind of does affect it. And also opening price can vary along with the closing price when the tape is kind of stagnant for both. But I do not, if anyone else has a clear answer, please speak up. But I personally, oh yeah, go ahead, send me a picture through DM and I can look at it after class. So I know what you're talking about. Sometimes they're not aligned and they move a little bit differently, but that's only off open and close, I think. During the day, they're pretty dead on. So I'm going to give a quick overview on SPY. For those of you that have access to the actual signal channel in the Discord, Rippy God, aka Hassan, he posted his levels for SPX, so I will not be going over those levels. I mean, yeah, everyone has different thoughts. I am thinking bullish only because a pullback makes sense, but all the news releases, it could be a chop weeks, if not months. Powell talks Wednesday, so we could have chop Monday, Tuesday, Wednesday until he talks. Anything is possible, but I like to have an idea, and I'm going off a slight pullback on SPY to roughly 431 to 430 a share, and then us to take off within those zones. I don't expect us just to run. I would like to see a pullback. I love pullbacks for loading calls. So a slight pullback to take off. And I'm not going to be buying 0 DTE. I'm looking at this from a bigger perspective. This pullback we had on the end of the week, it was a healthy pullback, a healthy sell-off. So the more we pull back, it's more conviction for people to like look into the long term of going bullish again. It could be a chop week. I would not be surprised, but I'm looking for a pullback, slight sell-off at open to catch that like relief bounce, I would say. It would be the same as this kind of situation right here. If I go to the 5-minute, I zoom in a lot. Oh my goodness. But we had like that double bottom, and then we pushed up on SPY after open. This is like what I'm looking at for a move. Then we pushed, and then we sold off again. I'm not looking to like buy and hold and then close, holding into the next day for a push. I just want to catch the intraday move when I play stuff like this, whether it's a stock or anything else. But going off the larger frame, I want to see a pullback to roughly 430 to 431. And that is where I'm hoping to take calls going off this support zone with historical rejections, which should now act as a support zone. So that's what I'm looking at. Does anyone have any last minute questions or anything? I'm not going to be charting any more stuff. So any questions or comments, stuff to make the charting sessions better moving forward, anything is appreciated. So let me know real quick.